It might only be a handful of months since a nearly entirely new C-suite took over operations at Solaris Resources. But that hasn't stopped the company from forging forward with securing further funding for the development of their flagship Warintza project. The all-new C-suite, save for the COO, was put into place just in January, but they've already managed to secure a highly competitive financing package. That package is expected to be enough to cover all costs at the company until a final investment decision is made for Warintza in late 2026. But what does that package look like? Let's dive in. Alright, so Solaris has entered into a financing package with Royal Gold, a Nasdaq-listed royalty and stream operator who is one of the biggest names in the business. The financing package here collectively is valued at $200 million and consists of two main components: a streaming portion, which applies to a narrow portion of the property, and a royalty portion, which applies to a larger area, but still doesn't quite cover the entire property. That last detail is a bit indicative of just how competitive this entire financing process was for Solaris. Their IR team referred to the entire process as having competitive tension. They've secured $200 million in financing, and the associated stream and royalties don't even apply to all the concessions that they own. On top of that, there are some terms and rights that have been put in place to further demonstrate just how tough the market is for royalty and streaming names right now. But we'll get into that in a minute. With that being said, both the royalty and stream cover the entirety of the currently proposed open pit for the project, but that's kind of to be expected. Anyways, the financing package is set to be paid out in a total of 3 tranches over the course of a 1-year period. The $200 million figure is said to be large enough that it will provide Solaris with all the liquidity they need to fund all de-risking activities at the Warintza project through to a final investment decision being made, while at the same time being large enough that they're able to pay off some senior secured debt that currently sits on their books that is owed to Orion. Now let's get into some of the details here. The first component of the transaction here is the stream. The streaming portion is rather simple. For every 1 million pounds that Solaris pulls out of the ground within what is called the RGLD gold area of interest, Royal Gold is entitled to 20 ounces of gold. The first 90,000 ounces of gold delivered under the stream will see Royal pay just 20% of spot for each ounce. After 90,000 ounces, Royal Gold will then pay 60% of spot under the stream terms. There's also a clause in place that if ore from outside the stream area of interest is commingled and processed at Warintza, then all ore processed is subject to the stream agreement until 230,000 ounces of gold has been delivered. So how many ounces of gold can we expect to be delivered under this part of the arrangement? Well, that's a bit of a murky question because Solaris as of yet hasn't actually released any sort of preliminary economic assessment or pre-feasibility study for Warintza. A PFS is expected to be released in the third quarter of this year, but until then we're flying a bit blind in terms of truly assessing this financing package. The short answer is that Royal has done their due diligence, and based on the pricing step-up terms, they expect to get at least 90,000 ounces from the transaction here. For the longer answer, all that we have to work with here is the mineral resource estimate released in July of 2024 rather than a PEA or PFS. That resource outlined that Warintza has 909 million tons at 0.53% copper equivalent in the measured and indicated category, and a further 1.4 billion tons at 0.37% copper equivalent within the inferred category in an open pit model, which, assuming we did our math right, works out to about 7.4 billion pounds of copper in the measured and indicated category, and a further 8.5 billion pounds in the inferred category of contained copper. With Royal Gold expecting to receive at least 90,000 ounces from the stream based on the pricing terms at 20 ounces of gold per 1 million pounds of copper pulled out of the ground, well, that math works out to the expectation that at least 4.5 billion pounds of copper will be pulled out of the ground over a reasonable mine life time frame, which on the surface seems rather feasible. If you're concerned about the gold being sent away, Warintza, again assuming we did our math right, is believed to have about 1.6 million ounces of gold at 0.05 grams per ton within the M&I category, and a further 2 million ounces within the inferred category. So 90,000 ounces isn't a big deal here. And if you're a bit of a math guy like me and Jay at $3,000 gold, Royal Gold will be paying about $600 an ounce, meaning they make margins of $2,400 on each ounce. At 90,000 gold ounces, in simple terms, they would have made gross margins of about $216 million, which more than pays for this entire financing package before you factor in things like the risk-free rate and inflation. But gold itself will presumably rise in price to cover that anyways. Let's move on. Streamers are some of the best in the business when it comes to getting their money back. So the longer answer basically comes back to the shorter answer. Royal Gold expects to receive at least 90,000 ounces of gold from this portion of the transaction. Okay, on top of the stream is the royalty. The royalty here is a 0.3% net smelter return royalty on all metal produced from what is referred to as the RGLD Gold Expanded Area of Interest, which covers a much larger area of the Warintza property, but still doesn't entirely cover all concessions. That royalty is set at an initial 0.3% as we said, but will increase by 0.0375% every year up to a maximum threshold of 0.6%, until Solaris either makes the first delivery of gold under the gold stream or 8 years following the closing date. This is a bit murky for modeling, so we called up the team over at Solaris to get the scoop on what they are modeling for a final NSR rate. The answer to that is about 0.45%, which assumes they get Warintza into production around 2030. Outside of the stream and royalty, there are some other details that should be addressed. First and foremost, the area of interest for the stream will expand to cover the same area as the royalty in the event that production does not begin within the next 8 years here. Second, either party may choose to terminate the stream within the first 5 years of closing, at which point Solaris will need to return the $200 million to Royal Gold with no financial penalties to be recorded. However, if that does happen, the NSR royalty will stay in place and be increased to 0.6%. Importantly, this option can be exercised in the event of a change of control occurring. Next up, the stream and royalty will be subordinate to any other future project financing, which keeps that competitive tension in place when it comes time to secure the funds needed to put Warintza into production. Royal Gold also holds a right of first offer when it comes to that final financing package, which is different from a right of first refusal. They can make the first offer, but if Solaris doesn't like it, they can go elsewhere without penalty. In the event that they do go elsewhere, Royal Gold will be permitted to match a certain percentage of the final offer. But basically, this allows all potential suitors to come to the table, while still ensuring that Solaris gets competitive project financing. There's also a clause in place where if Solaris sells off any property within the expanded area of interest, that property will be subject to a 1.2% royalty. And then there is the payment terms. The first tranche of the financing package, which amounts to $100 million was due upon closing of the transaction. And we're told that it has already been received and that the senior debt with Orion has already been settled. The second tranche at $50 million will be made upon a pre-feasibility study being published and the approval of the environmental impact assessment for the project. The third and final tranche at $50 million is due on the 1-year anniversary of the closing date of the financing package, provided all filings have been made for Royal Gold security on the transaction, which amounts to secured guarantees from the wholly owned subsidiaries of Solaris, while security will also be applied to the mining rights in Ecuador once those are registered in country. All right, so let's wrap it up. By all accounts, this financing package appears to be a strong indicator for the competence of the refreshed management team at Solaris. They've been in position for not even a full 5 months, and in that time, they've managed to secure extremely favorable terms on a non-dilutive financing package, which should hold them over until project financing occurs. That's not an easy feat. We're told that the 4 largest streaming and royalty names globally were involved in the process, all of which offered competitive packages before Royal was ultimately selected. Again, that's tough to beat. Now it's just a matter of executing. All right, everybody, we got lots of earnings videos over on our channel. So if you like mining earnings, you better check them out. You guys can probably notice a trend here. We're now reaching out to companies to get that additional context and color to give you guys a little bit more insights that you're not going to get from just reading a filing. If there's stories you want us to cover, let us know in the comments section. Also, if you enjoy this content, do us a favor, smash that like button, subscribe, and maybe share the content. All right, everybody, thank you for watching.